over to Mr. Deepak Jain, Chairman and Managing Director, Lumax Industries Limited. Thank you, and over to you, Mr. Jain.
Good afternoon, ladies and gentlemen. A very warm welcome to the Q4 and FY20 earnings call of Lumax Industries Limited. At the outset, let me wish everyone good health in these unprecedented times. Along with me on this call, I have Mr. Anmol Jain, Joint Managing Director, Mr. Vineet Sahni, CEO and Senior Executive Director, Mr. Naval Khanna, Executive Director, Lumax Management Services, Mr. Sanjay Mehta, Group CFO, Mr. Shrutikant, CFO, supporting with him, Mr. Ankit Thakral from the finance team, Ms. Priyanka Sharma, Head Corporate Communication, and SGA, our Investor Relations Advisor. The results and investor presentation are uploaded on the stock exchange and company website. I hope everybody has had a chance to look at it. Before we start with discussions on the financial performance of the company, I would like to share a few highlights of the automobile industry of India. The year 2019 witnessed the slowest demand in the past 2 decades owing to multiple reasons. The industry was pining hopes on a demand revival in FY21. However, the outbreak of COVID-19 pandemic has added to the pain of an already reeling automobile industry. The resultant lockdown announced to prevent the spread of COVID-19 adversely impacted the demand. The sector is also witnessing various supply chain issues along with labor migration.
The conference is now being recorded.
The auto OEMs have also trimmed their capex plans for FY21. Industry bodies have appealed to the government to lower the GST rate and to provide some policy support to induce demand and is awaiting some positive response from the government. Despite all the negatives, one major positive development has originated from the COVID-19 outbreak. Most of the nations are now considering India as an alternative manufacturing destination to China, and thus major investments in the Make in India initiative can be expected in the times to come. This will help the industry grow and will be beneficial for the industry-leading companies like Lumax to capture the increasing opportunities that come our way. The forthcoming year is expected to be challenging, and hence we remain cautious on the demand outlook. Our focus will be on efficiency improvement, reducing fixed costs, and devising mitigation strategies to face the near-term headwinds. We are rethinking, regrouping, and building a robust supply chain along with making manufacturing processes more agile as the focus shifts from production performance to surviving in an environment of unpredictable change by being able to react quickly to the changing market conditions. With the changing dynamics of the industry, companies' technological expertise backed with partner support, strong research and development, and a customer-centric approach, Lumax has emerged as a leading, agile, and innovative global automobile lighting solution provider. By leveraging our experience and strength, we would capitalize on any opportunities that come our way and further our industry in the leadership. The company has made new launches during the quarter. In the PV segment, we have started supplying on various lighting products to Honda Cars India Limited for their WRV model. We are also supplying headlamps to the Bolero van of Mahindra. In the two-wheeler segment, we are supplying various lighting solutions to BS6 models of Passion Pro, Glamour 125, Super Splendor, and Extreme of Hero MotoCorp, Ferret Java model of Mahindra, and Unicorn from HMSI. Awards and recognitions. Lumax Industries Limited has 4 awards in the 5th National Case Study Competition of ACMA. The company has also won the prestigious Gold Award for the Top 100 Best Annual Report for the excellence within its industry for the past fiscal year. Now, I would like to hand over the line to Mr. Sanjay Mehta, Group CFO, to update you on the financial performance of the company.
Thank you, sir. Good afternoon, everyone. I will just update on operational performance. The share of LED lighting stands at 34% of our total revenue. and that of conventional lighting stands at 66% during FY20. The product mix for FY20 as a percentage of total revenue is 66% as front lighting, 25% as rear lighting, and 9% others. The segment mix for FY20 as a percentage of total revenue is 66% passenger vehicles, 29% two-wheelers, and 5% commercial vehicles. Now I will update on the consolidated performance. The revenue stood at rupees 1602 crores for FY20 as against rupees 1851 crores in FY19, down by 13% year-on-year basis. For Q4, FY20 revenue stood at 387 crores versus 433 crores in Q4 last year, down by 10%. The revenue was affected by countrywide lockdown due to COVID-19. Manufacturing revenue for FY20 stood at 1471 crores as against last year of 1802 crores, down by 18%. For Q4, it stood at 334 crores against the last year of 418 crores, down by 20%. The company reported consolidated EBITDA of 165 crores for FY20, same as in FY19. The EBITDA for Q4 stood at rupees 38 crores vis-a-vis 39 crores Q4 FY19, down by around 4%. EBITDA margin stands at 10.3% as against 8.9% for FY19. Similarly, margin for Q4 FY20 are 9.7% versus 9.1% for Q4 FY19. Profit after tax and share of associates before exceptional items stood at rupees 72 crores as against 75 crores in FY19. Q4 FY20 it stood at rupees 16 crores vis-a-vis rupees 14 crores in Q4 FY19. PAT margin stood at 4.5% as against 4% for FY19. For Q4, PAT margin stood at 4.2% as against 3.3% for Q4 FY19. The capex incurred during FY20 is rupees 167 crores, including 22 crores incurred on new electronics facility and rupees 24 crores on right to use asset. For FY20, the board has recommended a final dividend of rupees 6 per equity share subject to the approval of shareholders at the ensuing AGM. This is in addition to the interim dividend of rupees 17.5 per equity share paid in March 2020. Now we open the call for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. Anyone who wishes to ask a question, you may press star and 1. First question is from Vimal Gohil from Union Asset Management. Please go ahead.
Yes, sir. Thank you for the opportunity and congratulations for the steady set of numbers in your challenging environment. Sir, I just had a question on the balance sheet. If you could just tell me what is the gross debt on your books currently, including the current maturities?
Okay, so I'll request the finance team to take it, please.
So the debt on the balance sheet, long-term debt is around 53 crores. The total debt is 53 crores. Out of that, long-term is 26 crores. It is excluding the working capital limit. And I take the total borrowing, including term loan, it is around 319 crores.
So total borrowing is how much you said, including working capital? 319. Okay.
Yeah.
Okay. And this working capital limit is a part of your current liabilities, right? In the working capital.
It's coming in the borrowing. Both in it is coming in borrowing.
Okay. So basically your total net debt will be 319 crores at this point in time, including all your working capital limits.
Yes.
Okay. Fair enough. And sir, the next question was on the overall demand environment. So basically, how are you placed in terms of your top line, in terms of your product portfolio in Maruti and Honda, I see that this particular quarter was very strong for Honda. So what's driven that? So if you could just explain that, and plus how will other top accounts like Maruti and M&M, how are they expected to perform going forward? And would you want to sort of maybe relook at your ambition to take your LED penetration to 50% in the next 3 years? Would you want to shift that right now given the circumstances? If you could just comment on that, please. Thank you.
So you had multiple questions. I could not hear your last question. If you could just repeat your last question, and then I'll.
Yeah. So I think we had the target to achieve 50% penetration in LEDs in the next 3 years, if I'm not mistaken. So if that is if that is if that goalpost has been shifted to any extent because of the current disruption, if you can just highlight that, please. Thank you.
Okay. So I'll just give you a little bit overview. I think fundamentally, if you look at the LEDs, currently in 1920, we were at a ratio of about 34% LEDs vis-a-vis non-LEDs of 66%. We still maintain that LED adoptions will continue. Most of the new product development, what we are doing, has got some elements of LEDs in the lighting, and hence we maintain an outlook that we, in the future, between about 3 years or so, we should be able to get gradually to the 50-50 benchmark. Second, in terms of the outlook, it is extremely difficult to say in terms of the revenue outlook. However, because of the customer portfolio what Lumax Industries enjoys, our top 3, we have Maruti Suzuki as well as Hero MotoCorp. And we are seeing that they are recovering faster than their peers in their respective segments. And we also are able to support them on their new product launches. So hence we feel that we would be also better off when the recovery comes through.
Okay. Sir, on that electronic facility and localization initiatives, where are we placed right now? What is the update there? If you could just give me some color over there. You were supposed to launch some new products in the Auto Expo. So where are we on that?
We continue to basically push for the localization initiatives. We also participated in the quarter at the Auto Expo, which we had saw a very good footfall as well as very strong interest by the customers on the new technologies which we had displayed specifically on the lighting. However, I think we are here because of the COVID-19 more to conserve the cash. So whatever investments we have done over the last year on the localization, especially also on the PCB, we continue to do that. But going forward, we will scale down our capex and probably shift our basically investments on the PCBs, specifically on the localization for the next 6 months.
So my next question was going to be on capex only. What is the amount of capex that you are expecting to do in FY21? And if I've understood it right, whatever the scale down is on capex, whatever incremental capex will be done, it will be done on the PCB facility, right? And any other maintenance capex.
That is correct. But for this year, about 75 crores will be capitalized in terms of capex, and we would be doing about 40 crores or so would be the cash flow.
Fair. Thank you, and all the very best.
Thank you.
Thank you. Next question is from Varun Bakshi from Equirus. Please go ahead.
Hello. Thank you for the opportunity, sir. So my first question is regarding our margin. So in this quarter, if I look at our QOQ margin, there has been a significant rise in our raw material costs as well. But primarily our raw materials have been linked to the crude largely, and crude has come down. So just wanted to understand what led to our raw material costs going up, and also was there any impact of higher mold sales on our EBITDA margin?
Yeah. So would the finance team like to take this question, supplemented by Vineet?
Yeah. So the raw material, which has been last quarter it was a 60%, now it is 61.9%. So it is hello.
Yeah.
Yeah. So it is largely, the increase is because of the product mix only. Nothing like the crude or something has increased that was affected. Second, regarding
Sanjay, I would also like to add, what happens, the settlement with the customer, there is a lag. It happens quarterly. So if you see the raw material going down, the actual impact normally comes as per the agreement with the customer, which is either quarterly or 6 monthly. So that's why you may not have a direct correlation with the results.
Okay. Yeah, this is Anmol Jain here. I'll just like to step in. Ms. Bakshi, I didn't understand your question. If I look at my raw material consumption on a year-on-year basis for Q4, it has actually improved substantially. And if I look at a consecutive quarter, Q3 to Q4, there is a very marginal increase. So I'm still not understanding you're referring to what quarter or what period.
So there is a raw material price, about 190 bits increase on a QOQ basis in our raw material prices. But over last quarter, crude has actually come down, and I think raw material prices, there is some disconnect between that. So I wanted to understand that on a QOQ basis.
I don't know. Okay, we can take it offline, but on a Q1Q basis, the raw material consumption of the company has actually gone down on a Q4 year-on-year basis. So we can take it offline and maybe have some more clarification.
Sure. Also, sir, was there any impact of higher mold sales on our EBITDA margins? Is there any difference between the margins that we earn on mold sales as well as the margins that we earn on our product sales?
So the mold sales, yes, do have a very different margin as compared to the product sales, but the mold margins are very different on model to model basis also and segment to segment basis also. But in totality, we do not see any major shifts in our mold margins on an annualized basis. But yes, quarterly, depending on the model mix, the margins do tend to differ.
Okay. Sir, also on our import content, do we have any exposure to China in terms of our imports? And is there any risk of all these geopolitical issues that are happening?
Yeah, so this is Deepak here. I think for Lumax, I think the direct import basically is around about from China is about 12 crores per annum, which is about 6% or so. So I think we do not, and we have alternate sources all across Asia. I think globally and looking also the trend with China, I think everyone is considering China plus one sourcing. And with that also we have taken up with the customers. So to answer your question very directly, we don't see any impact on basically China's resourcing.
Okay. And
sorry to interrupt you. So may I request you to come back in the question queue for a follow-up question? Thank you. Next question is from line of Pritesh Chheda from Lucky Investment Managers. Please go ahead.
Yeah, sir. Any comments you have on the margin side? We had managed the margin this year and expanded it actually despite a lower volume. FY21 also probably seems to be a low volume year as of now for 21. So any thought process on are there any levers for margins that we are working on?
See, there is two things. Revenue may not be in my control, but obviously, costs are under our control. And I think what we as basically a group and the company is taking very strong cost reduction initiatives, primarily in 3 areas, which is basically the raw material cost reduction. Second is also on the manpower cost. And third is based on certain insourcing as well as localization initiatives. So these all three initiatives are going on, and we are hopeful that we would be able to at least not have a significant depletion of margins, if even our revenues contract. And I think, as I said before, that we probably would be in a better state to suggest in the next quarter, depending on how basically our revenue model is shaping up.
Sorry, I missed the word. You said that even if our revenue dip,
we don't see gonna have such severe impact on basically the margins, because we are taking very stringent fixed cost reduction efforts.
perfect. Okay. And one more question I have. We keep on hearing all the time that in times like this, the OEM's preference for LEDs on the vehicle reduces because it tends to increase a bit of the cost for the end customer. We just wanted to understand, is this true, and what broader trends do you see? So is it also a situation where even lower end models are seeing LED adoption? If lower end models are incrementally seeing LED adoption, then the first comment that we keep on listening or hearing or reading in newspaper may not be true. So we just wanted to understand your thought process on this LED acceptance in the current phase also.
So I think, as you know, lighting as a product is a very, very strong, not just a safety product, but also has a very strong correlation on the design as well as on the visual appearance of the vehicle. Yes. And that actually has a big impact on the consumer buy decisions. And of course, cost is one aspect only. However, at least as I mentioned before in the call, that whatever new product developments we are doing, we are seeing actually a faster adaptability of LEDs. Just a case in point, even in some segments like the agriculture, the tractor segment, even they are actually adopting LEDs now. So we see that this trend will continue. Even in these unprecedented times, the new product development with our customers continues as is. So we haven't seen any basically stoppages on that. And I think this is also probably correlated, and you've probably seen media announcements from majority of the OEMs are saying that at least the R&D work and the business development work continues as is. So I think we are actually still maintaining our position that there will be fast tracking of LED adoptions, and hopefully from the 34%, 35%, we would be going closer towards the 50% in the coming years.
And lastly, what was our volume decline for FY20?
Finance team, would you like to basically see what was the volume decline?
It was 18% from year to year.
18%. Yeah.
What is industry of?
15%.
Around 15 to 16%. Yeah.
Okay. Thank you very much, sir.
Thank you.
Thank you very much. Next question is from the line of Nikhil Rungta from the Pond India Mutual Fund. Please go ahead.
Yeah, hi sir. Thanks for giving me an opportunity. Just two questions from my side. First is, how are we placed in terms of liquidity? And second is, in this current environment, there will be a lot of opportunities which might be coming in for acquisition. So if any opportunity come, would we be interested in taking over something?
So let me give you the second question's answer first. I think we are always looking out wherever we can fit our customer needs. And basis that, we will basically take a measured outlook. Today, our basically idea is to conserve cash and get over these unprecedented price flow, and hence cash flow management and cash conservation remains the key. We, I think, agree that there will be opportunities in the future, but instead of just acquisition, there could also be consolidation on the industry based on just elimination, because these are just very different times, and hence we will be having a very close outlook based on our customer requirements and needs. In terms of the cash, we can just I can give it to the finance team. They can answer.
We have unutilized limits of almost around 150 crores. My all fixed assets are not given as a security, so I have enough leverage to take further debt in case needed for any acquisition or something. So answer to your question, liquidity-wise, there is no problem. We have sufficient unutilized limits with us.
Okay. And in terms of leverage, to what level would the management be comfortable increasing their leverage to?
I think the issue here is not about a rule of what kind of comfort we have on the leverage. As I said, it's basically to do with the opportunity to see that what kind of customer basically input is given and driven. So we will basically take at that time a decision at what type of leverage. But today, I mean, say our balance sheets are not at all leveraged, and we do have basically good liquidity in the system if we need to further invest on any external opportunities.
Sure. Thank you. Thank you, sir.
Thank you very much. Next question is from Pratik Kothari from Unique Asset Management. Please go ahead.
Hi, sir. This is Sunil. Thanks for the opportunity and congratulations for good number in this tough time. Sir, my question is, you in your opening remark, you said there is a scope to become a manufacturing hub or maybe second source to China. So larger picture, you talked about Lumax. If you can say, is this a possibility of Stanley making India Lumax as a hub for maybe some products which were previously available in China? Because you previously also said that we are planning some announcement by Q4 of new products. So larger opportunity in terms of manufacturing in India, and second, related to Stanley, what new products, new projects we are planning to do. If you can little bit elaborate on this thing.
Sure. Thank you, Sunilji, for your comment and the question. I think there are two things very clearly. With Stanley, we share a very, very good and strong relationship over the last 36 years. I hope you may have visited basically the stall at the Auto Expo, which happened in February first week. I think there we displayed certain products which are probably electronic derivatives, which are in the HVAC panel. And that is something we are exploring for the Indian market. And this will be expansion of a relationship with Stanley. Post, it was right now only lighting, but these would actually then cover other electronic areas. Vis-a-vis actually using Lumax Industries as an export hub for Stanley's requirement. We are under discussion. But as you can well understand that the exports is not just because China has done something or something has happened geopolitically. It is primarily a much more midterm to long-term strategy based on cost, quality and competitiveness. However, we are in discussion with Stanley. How do we basically ensure that we are able to leverage the Indian manufacturing system for their global requirements?
Right, sir. And sir, second point, just wanted to understand, normally in this type of tough time, we always try to reduce costs, fixed costs and so many other things. We try to improve in terms of productivity. So if you can talk, which is a sustainable cost reduction and productivity improvement things we are doing and how sustainable those things will be, if you can say something on this.
So I think whatever cost cutting we do is going to be sustainable because our first emphasis is to basically cut down on the fixed costs. I said before on the call, I think the bigger opportunities, where I say bigger opportunity means saving potential is almost of around close to about 50% plus, is primarily where we are seeing good cost listing. However, the big ticket items are on the manpower cost. Also, in terms of the raw material cost, these are two costs which are the big ticket items for us. Of course, we are looking at all other costs, which could be of fixed of nature, and trying to see wherever we can reduce that.
More about any latest update and trend from your customer month on month, how you are getting schedules and your feel of recovery from maybe four-wheeler, two-wheeler, whatever larger picture you can give.
Sure. So I think in terms of, let me go segment by segment, but there are common elements in this segment. What we are seeing is that in the four-wheeler and the two-wheeler space itself, I think the rural market has bounced back a lot better, and which of the OEMs which are having a far outer reach at the rural markets, also who have good basically cash reserves or strong balance sheets which can help finance the sales, and third also which are in the lower segment of the industry vehicle. I think those are having a much better scope of a V-shaped recovery. The other shapes of recovery are basically coming in other segments. So for example, let me elaborate. On the passenger car, let's say for Maruti, Hyundai, they are in the entry-level segment. If you remember 10 years back, the A segment, B segment, they were actually having the majority of the revenues in the vehicles. And I think that had shifted to a C and D segment. And I think what we are seeing is, again, in the short term at least, inquiries starting from the A to B segment in both the passenger car as well as also on the two-wheelers. So motorcycles is having a lot better resumption also because of the efficiencies, as well as the motorcycle with the lower segment is basically having a strong revival in the domestic market. So we are quite optimistic, however cautiously, because Maruti, Hero are in our top 3 customers, and we are also having large market share with them. So we feel that we would be able to have a better recovery when they start selecting these models. So these are some trends which are actually coming out. Of course, agriculture in the tractor segment, we actually are seeing a good, stable recovery because of the rural demand. Commercial vehicles, we feel that it will take time. It has been basically over-regulated, as well as we are not seeing such a traction on basically the HCVs per se. However, the exposure to the commercial vehicle segment with Lumax Industries is relatively limited, as we are more exposed to the pass car and two-wheeler, and hence we are expecting a better recovery than compared to our peers.
Yeah, thanks a lot.
Thank you. Anyone who wishes to ask a question, you may press star and 1. Next question is from line of Anubhav Rawal from Monarch Network Capital. Please go ahead.
Hello. Yeah. Hi, sir. Good afternoon. I hope you guys are doing well. Just a couple of questions from my side, sir. So just wanted to know what would be our estimated capex outflow for this coming year?
I just had mentioned in the call that our capex is about 75 crores. Capitalization is 75 crores. Capex would be 40.
40 crores.
Yeah, 40.
Okay, perfect. And so just wanted to know, out of our total RM cost, can you give a flavor on how much would be the LED cost, light emitting diodes?
Only LED cost or the LED systems you're talking about, lighting?
So my
understanding is the conventional type.
No. So my understanding is that LEDs are something which is imported, right? So just wanted to know how much is that light emitting diode for
Sure. So Vineet, would you answer that question, please?
Yeah, so it's around 18% of the total RM cost is contributing to LED cost.
All right. Perfect, sir. And sir, just wanted to know, so what would be our current import content level and what is our target going forward?
So the current basically import content is primarily in the, let's talk about headlamps. So I think we are talking about in the conventional, both in the four-wheelers and two-wheelers lighting, it is actually, I would say, even less than about 4%. But when it comes to LEDs, in the passenger car, in the four-wheeler side, it is probably on the headlamp, it's about 60%, and on the tail lamps, about 30%. And on the two-wheeler front, it is on the headlamp about 30%, and on tail lamp, it's about 25%. And I think the localization we are looking at is 30% to, say, 15 to 30% improvement in the four-wheeler, and on the two-wheeler, about 5% improvement.
Okay, understood, sir. Just one last question from my side. So these new products that we are entering into HVAC, So, can you give some indication on what would be the capex or revenue potential from these products?
See, the order book which we have currently with the new products coming in is close to around about 450 odd crores. However, I mean, say 300 crores would be actually the replacement business. As you know, lighting has many minor model changes. So we basically would be having 300. 150 crores would basically be the projects which probably would be additional. And this is over the span of about 2 years or so. Now, this will also depend on the RFQ volumes based on, so you need to basically set off on that.
Okay, understood, sir. Perfect. Thanks a lot for answering. Thank you.
Thank you very much. Next question is from the line of Abhishek Shah from Valcore at Capital Advisors. Please go ahead.
Hi, sir. Thank you for the opportunity. Sir, I just had a few questions. I wanted to dwell further on our cost-cutting initiatives. Most organizations that we speak to currently are talking about how they intend to come out much more leaner after, in the post-COVID time. Just wanted to understand what sort of, fixed cost reduction, maybe what could be the areas that we're looking at. Some idea if you could just, help us understand. And post-COVID, what would be the cost that would stay? Maybe, I don't know, if it's possible to quantify, that will be helpful. That is one. The second question is that, a lot of companies have taken salary cuts, especially at the management level. Could be temporarily, but just want to understand, are we taking a similar hit or not really?
Okay. So let me give you a little bit of outlook on our cost-cutting initiatives, and then I'll also tell Vineet to supplement it. As I mentioned before in the call, that I think the two key costs, even if you look at our P&L, is the raw material cost as well as our manpower cost. And especially in these COVID times, I mean, say the manpower fixed cost is the one which basically is at a discussion level. Now, as proven management, what we have done is that we have discussed about the salary cuts for the staff for this quarter, and we will review it for the next quarter based ending this quarter, which is the Q1 for the 2021. And we have actually, from the top management, taken a 100% salary cut and down the level to 5%, averaging almost close to about 27% for basically the company. And this has been voluntarily, collectively been decided. Also, we are in discussions with our workmen how to basically also further take certain salary cuts given this unprecedented time. On the raw material cost, of course, I mean, say there is renegotiations as well as there is fundamentally insourcing and also consolidation of certain suppliers. But this is a long-term initiative, more than short-term, and we'll continue to basically improve on our raw material consumption based on the consolidation and the localization initiatives. In other costs, there are many other initiatives on the cash management, be it inventory, cash flow, as well as, I mean, say, looking at certain contracts which have been on the let's say, legal and professional, security, housekeeping. So all the other kind of service contracts we are talking to our service providers to renegotiate them and at least get certain reliefs so that we are able to reduce our fixed costs to ensure that we are able to have a consistent profitability even once our revenue contract. On the variable cost, of course, it is a outcome of our productivity as well as the revenue contraction. So we continue to monitor that on basis. Vineet, would you like to add anything further?
So, no, I think it's very clear. Just to add, on a regular basis, we have 28 areas identified clearly in the organization, on which the teams work to reduce the cost on a consistent basis. And of course, the results are reflected in the raw material cost or in the manpower cost. That is a reflection of the results.
Got it. So just one more question I wanted to ask was, in terms of labor availability, let's say, for example, if volume surprise us on the upside, can we scale up quickly or will there be a labor shortage for us to ramp up?
I think the industry is grappling with a labor shortage. We are cautious about it. Lumax is better placed because our contractual to our permanent workforce has a better ratio. However, I think there could be certain areas, not just because of the labor shortage, but still on the containment zones, like Maharashtra, like Tamil Nadu. So we are actually on a very, very cautious way. The safety of our employees are at the paramount of our concern today. So we are taking the adequate measures to have safe shop floors and also try and see where and all we can ensure that our labor is kept even on reserve basis. We are probably seeing certain measures for that as well.
All right. Thank you so much, sir. That's all from my side. Thank you.
Thank you very much. Next question is from the line of Bhagat Shah from CD Research. Please go ahead.
Good afternoon. Thank you for taking my call. So my first question is that how do you see the industry as a whole recovering, and what are the signs that you would be on the lookout for as a company?
So I think, I'm very optimistic always. I think as far as the recovery is concerned, the supply chains are ready, and I think there is a whole issue of demand. You can always already see that there are green shoots in the rural, in tier 2, tier 3 cities where it is not so congested, and people have restarted to buy. I think my biggest basically point would be, I think although Siam has given a data where they are talking about based on the macroeconomics contraction of the GDP, they've correlated it with the industry outlook. And their basically thing is to almost about, if the GDP is about the minus 2%, you're talking about a contraction of about close to 25 to 35%. That's how basically they have given. I think for our business plan scenario, I remain more optimistic than this. Although we do feel that there will be definitely a contraction, because given how the April and the May months have been, but our very clearly we are seeing signs of recovery, as I mentioned before, in our key customers, where they have a better far outreach in the lower segment, entry segment vehicles in their segment, as well as in terms of a higher financing power and a rural outreach. We are also seeing that in the aftermarket and the spares, we are seeing basically an uptick there. So that's a positive cycle. So that means people are started to come to the shops and basically start to buy. So we feel that the next quarter we are very, very cautious. We still have to see how basically the state level governments will talk about opening up or unlock version 2 and version 3 will play out. But we at least remain optimistic that in H2, specifically leading up to the festive season, I'm figuring that the growth should come back at least to about 75% of what we had basically last year.
All right. Thank you, sir. And so just for an understanding purpose, what is the revenue differential between a regular light and an LED light? For if you can just explain the difference for two-wheelers and four-wheelers both.
So I think primarily, not just to give a unit figure, but I think mainly depending on the amount of LED adoption, because LED has multiple functions within a lighting system. So depending on the LED adoption from a completely conventional to LED, it can go anywhere between 1.5x to 4x.
All right. And sir, you spoke a bit about this in your opening remarks also, but and somebody asked a question as well, but any sort of chance of reverse migration in the short term? I mean, 6 months or so?
You're talking about reverse migration of the labor again?
No, LED, sir.
No, I personally, again, as I said, you have to understand that for lighting, it is a early adopter in terms of the development cycle of the vehicle. And we do feel that in terms of going forward, LEDs will continue to get adoption. So as far as reverse migration. I don't think that is going to happen. However, there can be, instead of 3 years, it can take 4 years. That will depend on basically the customer's plans to launch. If they plan to then delay their launches, I think they may basically have a delayed LED adoption impact. But other than that, I don't think there is going to be a reverse migration for it.
All right. Thank you, sir. So just one last data point. Any plans for the company to increase its debt in the current year or next year?
Not as of now.
All right. Thank you so much, sir.
Thank you.
Thank you very much. Next question is from the line of Hasmukh Gala from Finvest Advisors. Please go ahead.
Yeah, congratulations, Deepak, for a very nice set of numbers in such a trying environment. Yeah. Just two things I wanted to know. SL Lumax, we have not discussed. So, they have done pretty well with 30% growth in the profit. So, how do you see the SL Lumax?
So, Hasmukh, we are waiting for your this thing to get that question, I think. So, SL Lumax, as you know already, it's a Hyundai-based, basically, entity. And I think, as I've always mentioned, that we should not look at quarter on quarter, but on the full year annualized.
Yeah, that's true.
If you look at from that perspective, they've had a strong performance based on, of course, Hyundai's performance also, which has been quite strong. So I think that is correlated on that aspect. And going forward, I think they are very closely linked with Hyundai's plans and outlook. And I think they are also, we hope that they will be able to maintain a stable performance.
Okay. And Kia also they are catering to, is it not?
Yes. So all Korean joint ventures would probably be doing that.
Okay. And one just clarification on this capex of 167 crore which we mentioned. How much we have spent on the electronics? I missed that number.
Sorry, I did not get your last part. Can you just please repeat it?
The capex in FY20 we said is 167 crore. Out of that, electronics was how much?
On the electronic, the PCB of that 167 was 24.
24. Okay. I thought 24 crore. I think he said something else.
No. Can you, Mr. Mehta, clarify, please?
Yeah, 24 is also what sir is telling is correct. PCB 24 and 24. What you're talking is leased assets also. Right to use is also.
Right to use assets. Correct.
Yeah.
But then, which are the other areas on which we have spent? Because this is only say 48 crore we are covering.
So primarily, they were done in terms of our expansions in our various plants. Bangalore, Sanand, Bawal, Daduhera, Pantnagar, Chakan. So we had basically expanded on our this thing. Mainly it was done, if I were to look at it in terms of, excluding the leased assets, it is about 145 crores. And in our Bangalore, Bawal and Sanand, which were the main parts we were doing in the north, south and also in the west, we have basically together cumulative, we have done close to around about 90 crores.
Okay. So current year when you are guiding for 75 crore capitalization and 40 crore capex, will there be any other thing other than that on account of say the regular maintenance capex, etc.?
That would be included in that. About 25 crores would be in that.
Okay, it will be included in that.
Yeah. So, sir, we want to be very conservative this year at least on the capex. And of course, sir, with some contraction, we will have capacity. So we want to be very, very cautious on conserving cash.
Okay. Thank you very much, sir. Wish you all the best.
Thank you.
Thank you very much. Next question is from the line of Vishal Srivastava from Edelweiss Financial Service. Please go ahead.
Thanks for taking my question, sir, and congrats for good set of numbers, even in the challenging scenario. Sir, I have one question. Sir, there is an understanding that with implementation of BS6, the adoption of LED will increase further. So hence, in FY21, do you think LED penetration will naturally be more compared to FY20? That was my question, sir.
Yeah, so as I mentioned that because of this COVID, we maintain our direction that from a current 35% LED revenue, we will basically move to about a 50-50 LED revenue within a span of 3 years. I think this year whatever launches we are having will have certain LEDs to it. But because the whole volume being muted, it is difficult to estimate what will happen this year. But it's not just because of BS6 transition, but also the multiple factors on actually changing consumer behavior, which is actually having a fast track of LED adoption as well as lightweighting and energy efficiencies. So we continue to see this trend and faster adoptions of this. And as I mentioned before again, that on all the new projects what we are doing, there is some element of LED in the lighting systems on all segments.
Thank you, sir.
Thank you. Next question is from the line of Shashank Kanodia from ICICI Securities. Please go ahead.
Yeah, good afternoon, sir, and congratulations for a resilient performance and your detailed response to all queries. So, one query I had was regarding some 2 or 3 years back, there was some investigation by tax authorities across the group level. So, have that investigation been culminated, or anything that you heard from the tax authorities, or any development on that?
I will request Naval Khanna to basically answer this question.
Yes, sir.
Naval, are you there?
Yes, sir. Yes, sir. Yes, sir. I am here.
Yeah. Can you please answer
Please
on
repeat
the
the question again? Could you please repeat it?
Yes, I think December 2017 there was some investigation by tax authorities across at the group level, right, for Lumax Group. So just wanted to understand, have we heard anything back from them, or what were they looking for? Has that case been resolved? Any color on that?
The block assessments for that has already been done. Most of the points have been settled, and whatever are the objectionable points, we are at the stage of first appeal, and we are quite confident and hopeful that it will be settled in favor of the company, because there is nothing major findings which have been found.
Okay. And so what is the contesting amount at their front? I mean, what is the contesting? And is there any contingent liability to us?
No, there is no contingent liability, because as such we are having a huge amount of MAT credit available, as well as the unabsorbed depreciation also available. So whatever demand is also there, which is less than 5 crore kind of a demand, that is also appealable. So because of the MAT credit available and the unabsorbed depreciation, there is no reason of putting it into the contingent liability.
Fine, sir. Thank you for your explanation. That's all from my side. Thank you.
Thank you. Thank you.
Thank you very much. Next question is from the line of Atul Prakash from Investor Research. Please go ahead.
Hello, sir. Just wanted to have the target level for FY21. Just wanted to know that.
Sorry, can you repeat your question?
Yeah. What is the target level for FY21?
Target level in terms of what? Revenue, you said?
Yes. Yeah, revenue.
Yeah, as I said, sir, we are not giving any outlook as of now. Sir, we are going to probably be on a wait and watch, but cautiously optimistic. And probably in the next quarter, we would be in a better position to give you a target outlook.
Okay. Just one more question, sir. What is the CPLTD portion, if you can tell?
Can you basically, Mr. Mehta, can you basically do that?
Can you repeat the question, please?
What is the current portion of the long-term debt?
Current portion of the long-term debt is, I think, 26 crores.
26?
Yeah.
Okay. Thank you.
Thank you. Next question is from the line of Rakil Shah from Cabro Capital Advisors. Please go ahead.
Yeah, hi. I just wanted to know what's the cost difference between your import content and the localized content?
Well, I think obviously in a localized content, we have a better possibility on specifically on the electronic component, on the four-wheeler especially, to have a margin improvement of about 100 to 150 bits. However, on the two-wheeler, it remains the same. But please bear in mind that about in 5 years, the rupee devalues 15%. So I think that's one of the basic attraction on basically localizing.
Okay, got it. And in the last quarter, there were some questions regarding the debt levels, and you guys had mentioned that it's a temporary phenomenon because the stretched working capital cycle. And I agree to the fact that the things have just gotten worse since then. But what is your sense on the debt levels? Where do you see it going in the next 6 months to 8 months?
The company's debt level?
Yeah.
Can you repeat the question, please?
So basically, the previous quarter, there were some questions regarding your debt levels, and the management had said that it was a temporary phenomenon because of the stretched capital cycle, the working capital cycle. So where do you see it going from here? From I think currently you have 300 odd crores, right? So where do you see that going?
Yeah, Mr. Mehta, would you like to basically say that? And I think also, before that, I just wanted to say that I think fundamentally, if you look at our cycle today, say our biggest basically concern was on tier 2s, tier 3s. And we need to also do certain vendor financing as well, and the customer financing based on the customer cash flow. So just to give you, this is the current situation, not just with Lumax, but of the industry. And now I'll just request Mr. Mehta to basically say how it's going to forward for the next 3 to 6 months.
Definitely, it is not like that because of the revival of the sales, etc. And moreover, because of the lot of measures we have taken, as mentioned in the earlier questions of cost measures, as well as the limited, very, very cautious capex. Definitely, the debt level way forward is going to be on the reduced way. So the answer, it will not like that. It will be way forward. It will be reduced in the decreasing trend.
Okay.
It is only temporary phenomena at the moment.
Okay. And one more question was on the order inflow, if there was any in the current situation. So, you can, in the news you see that a lot of car launches are happening actually in the last few months. Tata's launched one, Volkswagen and Skoda both have launched. They have plans of launching models in the coming few months or years. So have you gotten new orders from those guys? What's the order inflow as of now?
I think I mentioned again earlier in my call that the total order inflow right now, which we have, is about 450 crores, of which 300 crores is replacement, 150 crores is new order. And as and when the orders materialize, we will basically be talking in our earnings call of the products which we have been launched.
Okay, that's it from my side. Thank you.
Thank you very much. Next question is from line of Abhishek Jain from Dollar Capital. Please go ahead.
Thanks for taking my question, sir. Your revenue contribution from Maruti is increasing continuously. And what is the new business have you won from the Maruti, which is helping to increase your revenue pipe? And what is the current SOV from the Maruti?
We can talk about not the new business which you have just awarded, but I think I can talk about the last basically 12 months. Vineet, would you like to just add that in terms of the SOB as well as what it is coming to be?
Yeah, so we have around 65% of a share in headlamps, the front lighting basically, and 34% in the rear lighting.
Okay.
In Maruti, yeah.
The good part also, just I would like to add, the good part also in the current situation is that we are actually almost in their models which are on the A-B segment and of course on the Swift. So we are pretty well placed if basically the re-emergence of A and B segment sales start happening due to COVID. So we probably should see a better recovery than our peers or competitors within the Maruti framework.
Okay. Sir, in two-wheeler space, how much SOV we have with Hero MotoCorp and HMSI?
So HMSI, we are 50-50, 50%. And Hero, we are approximately 65%.
Okay. But your revenue from the Hero MotoCorp was seen a sharp decline in the last couple of quarters. Is it because of change in mix or have you lost some business over there?
No, it's
So for
changed.
if you see year on year, I mean, so the customer has declined 18%, but we have basically declined around 24%. And as Vineet said, this is primarily because of certain models which we were not on, and they have basically done that.
So you have lost some business there?
No, we have not lost any significant business. There has been some model allocation. Like instead of one model, we have got another. So those things have happened.
So let me explain how the lighting works. I think it is not model business which we lose, but actually the model which we are on does not do better. So for example, depending on the complete pie of the customer, depending on how the model gets performed, depending on various models, then we get the market share.
Okay, getting your point, sir. Sir, my last question is related with the effective tax rate. What would be the effective tax rate for FY21?
Mr. Mehta, would you take that, please?
It will be around 26 to 27% because the most of the deferred tax has been accounted this year. So we are continuously in the old tax rate till our MAT is there for next 2 to 3 years, and after that we will plan for a new rates in tax rate.
So effective tax rate would be about 25-26%.
Yeah, it is like that.
Okay. Thanks. That's all from my side.
Thank you very much. Ladies and gentlemen, due to time constraint, that will be the last question for today. I will now hand the conference over to Mr. Deepak Jain for closing comments.
Well, I would like to thank everyone for joining on the call. I hope we have been able to respond to your queries adequately. For any further information, request you to kindly get in touch with SGA Investor Relation Advisor. Thank you once again, and please be safe.
Thank you very much. On behalf of Lumax Industries Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.